A loan is an arrangement in which a lender gives money or property to a borrower and the borrower agrees to return the property or repay the money, usually along with interest at some future point in time. Usually there's a predetermined time for repaying a loan, and generally the lender has to bear the risk that the borrower may not repay the loan, though modern capital markets have developed many ways of managing this risk.
No. You're not. No. No. Do you know how to get along? No! No!
There are many types of loans. One of them is
Mortgage.
A mortgage is a long-term loan used to buy a house or property.
The second type is home equity.
Everybody right here. What you need to do is be thankful for the life you got, you know what I'm saying?
Home equity loans are used to make improvements on your home, such as additions, renovations, and redecorating.
The third type is student loans. Oh my god, how am I going to pay for college?
student loans are given in order to help pay for professional education.
And the last type is auto.
Auto loans are given in order to help pay for a car.
I'm Wayne Ryder. I'm President and CEO of Putnam National Bank in Cornwall, New York. The first thing any bank looks for is proof of income. We've got to make sure the borrower's got the ability to service the debt. And then we ask the customer for 2 years' worth of income taxes. That tells us really what their income is. We start every loan process with a personal interview. We do not extend credit without seeing the people face to face. After we personally talk to the people and find out what they want to do, why they want the loan, we have them fill out paperwork. First is an application. We have just two simple forms of applications. That's just a consumer loan application with simple, straightforward information on it, and this is a mortgage application. And those are the two types of applications that we use to get information from our customer. This is a starting point. And then this is our own loan interview form, which I use and I've just developed over the years and find it very, very helpful. Information, we go into a review mode, and we check to see if the people have a banking relationship with us. Do they have a deposit relationship with us? We try to deal mainly with our own depositors. We deal with some outside depositors, some outside customers, but mainly our own depositors. We do a credit report on them to verify that the information they've given us on the income and expense side is accurate. Then we do a financial analysis to determine whether or not the borrower has the ability to pay the debt. We take their gross income, we take their housing expense, and it's either rent or mortgage payments, plus their real estate taxes, plus all of their credit card debt and car loans and car leases. If they have to pay, if it's a husband or wife that has to pay alimony and child support, we add that into their expenses. If it's a person receiving those payments, we add that into their income. Then you add a proposed loan to that, and you make sure then that their total payments don't exceed 38% of their monthly income. And if they do, you probably don't want to do business with them. So after we go through that, then we've got to go through a compliance review to make sure that these are just some of the laws that we have to comply with. We've got to make sure that we're not violating fair lending laws. If it's a woman applying for credit in her own name, we can't count the husband's income. Home Mortgage Disclosure Act, we've got to make sure that we're not redlining a certain area. You've got customer identification processes to make sure that we know who our customers are, that we're not lending to terrorists. I mean, it sounds crazy, but that's what the U.S. Patriot Act is. We've got appraisal guidelines that we have to observe. We've got currency transaction reports we've got to file. If at the time a borrower comes in and they try to pay cash for a house at a loan, we've got to record that cash, we've got to report it to the IRS, we've got to report it to the federal government. We're a spy for the federal government. We also have to make sure that if it's a house, that there's flood insurance on the house. If it's some type of any question about the environmental safety of the house, we have a type 1 environmental assessment done. If it looks like it's a real bad situation, we have a type 2 done. So after the environmental review, we give our customers it's called a real estate settlement disclosures, where we reveal to them what the interest rate, the actual annual percentage interest rate is going to be on the loan. We disclose to them all the fees in advance they're going to have to pay on the loan if it's a mortgage loan, what the appraisal costs be, what the insurance costs will be, what the mortgage recording taxes will be, so everybody knows up front what all the fees are going to be. Then after we've gone through all of those processes, the interview, the application, the loan documentation, the bank review, the compliance review, then we have the customer sign the note and sign the disclosures, and that's the simplest part of the whole process. And then we give them a check, and they go on their merry way.
Like there are many types of loans.
Yeah, I'm ready whenever you're ready.
There are many types of loans. One is
Wave to the camera. These are kids that are not going to be able to pay for college.
I wave to the camera, Kelly, I hope you know. And those are the type of loans. There you go. No? Yeah. Wait, did you didn't start yet, Jen. No, you didn't.
No, I did.
Oh, what?
Fine, you're right. Do you know how to get a loan?
No.
I can't do it.
So did I for a second. When you get the lady smoking over there.
Oh yeah.
Which will be the sixth generation. No. Oh, is it?
But you can cut it.
Student loans are given in order to help pay for professional education.
What are you doing?